There's 60% upside on this oversold opportunity. Now, panics create opportunity. That's a rule every investor should live by. Now, there's few bigger panics unfolding right now than China, and that has, my kind of money-making radar tingling. Hi, I'm Matthew Carr, Chief Trend Strategist at the Oxford Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. Now, bear with me because this is a mouthful. The Crane Shares Hang Seng Tech Index ETF has been gutted this year. It's fallen more than 20% since its peak at the end of June, but that's merely a microcosm of the pain Chinese tech shares have suffered in recent weeks. Many are down, 50% or more from their 52-week highs after fears of this new consumer privacy regulations that were coming in. They sort of whipped investors into this, sort of frenzied panic. But the reality is the law going into effect on November 1st is nowhere near as severe as everybody originally thought. So these lows now have that sweet perfume of oversold opportunities, especially with what's ahead. Right now, we're on the cusp of the largest online shopping day in the world, China's Singles Day, which takes place in November. There's nothing like it on the planet. This is a holiday that began in 1993 at Nanjing University as Bachelor's Day, right? The number one represents a bear stick, which is slang for a lonely man in Chinese. So it's a nice big joke holiday. Now, this is an unofficial holiday, just kind of like Amazon's Prime Day, but it's been surging in popularity and it just keeps getting bigger and bigger. Last year, Alibaba's gross merchandise sales during the event were $74.1 billion. That was a 92% increase over 2019. And keep in mind, that's just one company. On top of that, if we compare it to the US, the largest online shopping day in US history was Cyber Monday in 2020, and that totaled $10.8 billion. For the US, that $10.8 billion, that included everybody, not just one company. Now, Alibaba has made Singles Day its own, but there's the company's main rival, JD.com, which started its own 11/11 celebration. Baozun, the e-commerce platform, is in the mix. Then there's Tencent, Joy, and a whole bunch of other Chinese companies that are all vying for these pieces. Here's the deal, though. Buying shares of Alibaba to play Singles Day isn't the best route, at least not in my opinion. I know it seems like the obvious choice, but there are better options. In fact, company I've talked about here before, Vipshop Holdings is my own personal favorite. The company is an online discount retailer in China. It sells everything from apparel, cosmetics, and jewelry to electronics, home appliances, and smartphones. It currently has a little bit more than 51 million active consumers, and projections are for revenue this year to grow more than 22% to just over $19 billion. That's key because that's more than double the company's current market cap. I love that situation where we have that revenue to market cap ratio like that. But my real reason for liking Vipshop during this time is this chart right here. And this is why, like I said, I love the company as a play on Singles Day. This chart is the performance of Chinese retailer shares from November 1st to April 1st and since 2017. And we can see there's actually just no competition. Vipshop shares are averaging a 62% gain from November 1st, just a little bit before Singles Day begins to April each year. That's more than 3.5 times better than the second best performer, JD.com. And just take a look at Alibaba shares. They're averaging a meager 1.3% gain during that same stretch. This is a situation where, bigger isn't better. Alibaba made the holiday a global phenomenon, but it's become one of the stocks, in my opinion, to avoid on the Singles Day trend. For me, investors should be going small with Vipshop for that exposure to the Singles Day and all that upside that we have there. The trend is definitely your friend in this situation. and a 60% gain from where shares are currently trading would take them back to where they were trading in June. So there's a lot of upside here. Well, I'm Matthew Carr, Chief Trend Strategist at the Axel Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.